Hello everyone and welcome back to Sudden Wealth. I hope you're enjoying the last few hours of the weekend. As you can tell by my voice, I am still not recovered, but I'm getting there. So thank you very much for your support and the kind words in the comment sections. If you do enjoy the content, don't forget, drop that like and subscribe. The channel is almost at 750 subs, so let's make the last push into it. So about a week ago, I had a video on if I was retired from crypto, i.e. retired thanks to the gains that I had in crypto, where would I live and why, depending on how much money I had. And there was actually one of you who asked me a question, which was, to what kind of assets would I de-risk in a situation like that? So just to be clear, I will always de-risk as soon as I get the feeling that the bear market for crypto is coming. And the reason, well, it's quite obvious, right? Things go down 90, 95%, 99%. And typically the signals are quite obvious, but people are so euphoric at the moment where JPEGs are being sold for $1 million and coins with a picture of the dog are going up and up and up and up. Nobody wants to think about, okay, what if the party stops? Now, you are all aware, if you're not, check my video of last week. It's the one that had actually a lot of views, so thank you for that. And I do believe the Cayman Islands is the best place to retire that I've seen for my personal condition. So that will be my plan. But what kind of assets will I have? So that depends a bit on the type of income that I will generate from this bull market. So for example, let's say that I have, everything goes super well, everything is amazing, and I have, $8 to $10 million. Well, in a situation like that, if, very important, interest rates are fairly high, like they are now, then in my opinion, there's nothing better than a money market fund. Because it's filled with short-term bonds, T-bills, from the U.S. government, and they're paying, 5.5%, 5.6% as of now. I mean, if you have 10 million, that is 500K per year. I mean, so if that is and basically with the closest to almost no risk as possible. Now, is this financial advice? Should you follow my strategy? No, I'm just thinking about how I will eventually, depending on my situation, will do it. I mean, if in that scenario, if I can live with $500,000 per year just of interest of US government, short-term, very important, short-term debt, then to me that would be the safest option. Now, I am of the opinion that concentration of investment in assets is crucial to develop generational wealth. But the way to keep it is via diversification. So you have a scenario in which, okay, what if the US dollar completely collapses, right? If you're getting bonds, all the bonds are in the US dollars, that sounds kind of risky. So probably I would have money market funds of for US debt, maybe Australian debt, maybe a little bit of European debt. So I will try to split it a little bit in terms of currencies. Then let's say the scenario is, okay, I made a lot of money, let's say a couple of million, but it's not really enough to completely just go to the Cayman Islands, retire, blah, blah, blah. What I'll probably do is have a big portion in cash. I would say probably around 15%, 20%. And then I would leave always, by the way, in all the scenarios, I would always leave a percentage in crypto. So that is, to me, very clear. I would just de-risk from it, but I would leave at least 10, 15% over there, 10, 15% cash. So that's about 30. And then I would look at stocks that, depending on the situation that they were. So for example, if interest rates were extremely low, probably stocks have a bit more to run, so I would just buy an overall index fund that would probably yield somewhere between 5 to 8% per year. And then what I would try to do is, with a smaller percentage, let's say 10-15%, I would be looking at a bit down AI stocks. So I am convinced that we've had, and we are still having, a bit of this artificial intelligence stocks mania. And eventually I think there's going to be a correction, as it's a new industry. And I do think most of them will not work out. But when there's a lot of carnage and all of them are very down, I think there's going to be a time where a few of them will be giving strong hints that they will survive. And I will be checking those accounts very carefully, and I will be assessing the likelihood of their survival. And then I would buy heavily on them, because I get the feeling, or I predict, that they will be as big or bigger than what Amazon and Microsoft, Google, etc., that came from the tech bubble. I mean, Microsoft is older, of course, but really the big push came in the tech bubble. That came out of the tech bubble. They were the best performing stocks of all time. So I do, or at least in the past 2 decades. So I do think I would be looking for the next exponential crypto growth style on stocks. And then, as we move forward in the bear market of crypto, I would start to deploy some of the cash, maybe selling some of the best performing stocks in order to go back to crypto. And I think by the second cycle, I should be able to create the wealth that I need. If I didn't make it this cycle, I think the next cycle will work out fine for me. Will I go for commodities, gold, things like that? Look, you need gold to go to 2,500, 600 just to break even from 2011 in real terms, meaning adjusted for inflation. You need gold to go to 3,300 to break even from the 1980 bull market adjusted for inflation. And bear in mind, these are inflation numbers from the government. So actually, probably with real inflation numbers, you actually would need something much bigger. Now, what commodities usually do is big bull cycle, followed by a deep bear, and then sideways movement for like 20 years. Why would I do that if crypto, I'm much more comfortable with crypto. See what I mean? I think things like oil, natural gas will do well, because as the world is shifting to renewable energy, I do think these things will become more scarce, but for the rest of the world, they are still very important. So I do think that they will play a big role. So oil and gas, I think they will do well, but I think probably about it. Oil is also, at $80. In 2008 was $150. That's my point. You see, commodities, they either go down quite aggressively or just to go sideways nowhere for long periods of time. So I do think stocks and even bonds are better in my opinion. And yeah, so that's what I'll be looking at. If I have enough money, probably I will have a lot of just short. If interest rates are still high, I will have short-term bonds, funds paying 5.5%, which is pretty much almost risk-free. If I didn't, I will always have partial crypto, partial cash, then partial bonds, for example, or partial, or depending on the other scenario that I mentioned, partial stocks, and then have a little bit on the high AI type of stocks. If I do see big developments in the world for certain commodities, maybe I will also allocate something to them, but that would be about it. Oh, and I would try to get AI stocks, not just in the US, in other geographies as well. That way it gives you a bit of protection against US, number one. but also against currency, which is also important. But yeah, I mean, once again, please don't use this as any type of financial advice. I'm just answering a question that was made to me, which is what I would do in order to de-risk from crypto if I believe that the bull is coming into an end and the bear is starting. That's it. That is what I'm thinking about doing. But, you know, these things, depending a bit on the shorter term part of the events, maybe I will adjust here and there, but we'll see. In any case, these are the good problems to have. Am I right? So thank you very much, guys, for your support. I'll catch you in the next one, and have a great week. Don't forget, like and subscribe. Thank you very much.